So you paid for your own health insurance all year, 12 months of premiums out of your own checking account, no employer matching a dime of it, and now you're staring at your return wondering whether any of that actually comes back to you. Here's the part almost nobody tells freelancers. The IRS reported that roughly 4.5 million individual returns claimed the self-employed health insurance deduction, worth about $33 billion in total, in the most recent statistics of income data. That's a real, above-the-line deduction. And a huge number of solo workers either take a fraction of what they're owed or stick it in the wrong place on the form and quietly hand the IRS money that was never theirs. So, which one are you? Let's start with what this deduction actually is, because the name is doing a lot of damage. It's the self-employed health insurance deduction. It lives on Schedule 1 of Form 1040. And per the IRS instructions for Schedule 1, it's an adjustment to income, not an itemized deduction. That distinction is worth real dollars. You do not need to itemize. You take the standard deduction, which the IRS set at $16,100 for single filers in 2026, and $32,200 for married filing jointly, and you still get this on top of it. Compare that to the medical expense deduction on Schedule A, where you only get to deduct the portion above 7.5% of your adjusted gross income. That one's basically a mirage unless you had a hospital year. This one has no floor. First dollar of premium, deductible. And what counts is broader than most people assume. Medical, dental, and qualified long-term care premiums for you, your spouse, your dependents, and this is the piece people miss, any child of yours who was under 7 at the end of the tax year, whether or not you claim them as a dependent. That rule came out of the Affordable Care Act, and it's still on the books. Marketplace plan through Healthcare Gov? Counts? Private plan you bought direct from a carrier? Counts. Cobra from the job you left in March? Counts, as long as you're paying it yourself and you meet the other tests. My take is that most freelancers dramatically undercount this line because they only think of the monthly premium on their own plan and forget the dental policy. Forget the kid on their plan, forget the 4 months of Cobra. Add it up properly. Obviously, your family size and which plan you picked change the number completely, but the categories are the same for everybody. Now here's where people wreck it. There's a cap, and the cap is your net self-employment income from the business. The plan is established under, not your total income, not your gross receipts. The IRS is explicit about this. Your deduction can't exceed your earned income from that trade or business. So, if you netted $9,000 freelancing in 2026 and paid $14,000 in premiums, you deduct $9,000 and the other $5,000 doesn't vanish. But it doesn't carry forward either. It can potentially go on Schedule A as a medical expense, subject to that same 7.5% AGI floor. And net means after your Schedule C expenses and after the deductible half of your self-employment tax. If your Schedule C shows a loss, your deduction here is zero. Full stop. This is exactly why I tell people to stop treating December like a spending sprint. If you're right at the edge, buying a $3,000 laptop on December 28th to write it off can shrink the income that's holding up your health insurance deduction. Just write it off is the most misunderstood phrase in freelancing, and this is a clean example of why. The other disqualifier catches people every single year. You can't take this for any month you were eligible to participate in a subsidized health plan through an employer, yours or your spouse's. Eligible, not enrolled. If your spouse's job at a hospital offered family coverage and you turned it down to buy your own marketplace plan, those months are dead for this deduction. But the test runs month by month, which is the part that saves people. Say you left a W-2 job at the end of April 2026 and went full-time freelance in May. May through December, 8 months, you're eligible. You just can't claim January through April. Run the calendar honestly, because the IRS pulls Form 1095 data, and this is the kind of thing that generates a matching notice. Let's put actual dollars on it, because that's the whole point. Say you're single, you netted $70,000 on Schedule C in 2026, and you paid $620 a month for a silver marketplace plan. That's $7,440 in premiums for the year. Because it's an above-the-line adjustment, it drops your AGI from $70,000 to $62,560. At the 22% federal bracket, 22% of $7,440 is $1,637 in federal tax you don't pay. And it doesn't stop there. A lower AGI can pull you under phase-out thresholds for other things, and it feeds into the Section 10998A Qualified Business Income Deduction calculation. So the real benefit is often larger than the headline number. Your bracket is doing the heavy lifting here, so if you're in the 12% bracket, that same $7,440 is worth about $893. And if you're at 24%, it's closer to $1,786. Same premiums, very different refund. Now, one thing this deduction does not do, and I want to be blunt because it costs freelancers thousands, it does not reduce your self-employment tax. Self-employment tax is 15.3%, 12.4% Social Security, up to the SSA's 2026 taxable wage base of $184,500 plus 2.9% Medicare with no ceiling. And it's calculated on your Schedule C net profit before this deduction ever shows up. So, on that $70,000 example, the health insurance write-off saves you federal income tax and nothing else. Honestly, I think this is the single most misunderstood mechanic in freelance taxes, and it's why people are shocked at their quarterly numbers, even after a good deduction year. Which leads to the workaround I'd actually recommend if you're a smaller operation. Get an HSA-eligible high-deductible plan and fund the HSA. For 2026, the IRS limit is $4,400 self-only and $8,750 for family coverage, with an extra $1,000 catch-up once you hit 55. That contribution is also above the line. It's triple tax-free going in, growing, and coming out for medical costs, and it stacks right on top of your premium deduction. Here's what I'd buy. Pair the marketplace premium deduction with a maxed HSA and a solo 401k, where the 2026 employee deferral limit is $24,500 and total contributions can reach $72,000 depending on your income. Most freelancers set up the solo 401k years too late. I did, and it cost me. And the same procrastination hits the HSA. Your health situation matters here genuinely. If you're managing a chronic condition and hit your deductible every February, a high deductible plan may be the wrong trade even with the tax break. There's a second structural move worth knowing if your net profit is comfortably into six figures. If you've elected S-Corporation treatment, the mechanics change. The S-Corp pays the premiums, reports them as wages in Box 1 of your W-2, and you deduct them on Schedule 1. Skip that reporting step, and the IRS can disallow the whole thing. And this is where I help freelancers figure out the money side of going solo, because the S-Corp question is where good advice gets expensive. It only makes sense once your net profit reliably clears roughly six figures, and you're paying $1,500 to $3,000 a year in payroll and filing costs to get there. Below that, stay a sole proprietor and take the deduction the simple way. One last thing on timing, and it matters for anyone on a marketplace plan. If you're getting the advanced premium tax credit, your subsidy and your deduction are linked in a circular calculation the IRS lays out in Publication 974. The deduction lowers your income. Lower income means a bigger credit. A bigger credit means smaller net premiums, which shrinks the deduction. Good tax software runs that loop for you. Just don't try it on paper on April 14th. And know that the enhanced ACA subsidies from the American Rescue Plan expired at the end of 2025, which means for 2026, the old 400% of federal poverty level subsidy cliff is back in play. CMS reported average benchmark premiums rose about 30% for 2026. If your income is anywhere near that cliff, the interaction between this deduction and your subsidy is worth thousands, not hundreds. I'm not a licensed CPA or financial advisor. This is general education for freelancers, not personalized advice. If this cleared something up, subscribe. I put out one of these every week for people doing their own 1099 math. And if there's a specific freelance tax question eating at you, whether it's quarterlies, the S-Corp threshold, or something your accountant brushed off, leave it in the comments and I'll build a video around it. Subscribe so you don't miss the next one.